Welcome back everyone to the Moneycontrol live stream. You're watching another edition of Markets with Santo and CJ, and it's been a pretty bad day. If you look at the entire market has been weak from the opening bell onwards, and largely led by negative cues emerging from the Chinese market this morning. Clearly fears of another lockdown there after the Hong Kong leader tested positive for apparently after a meeting with Chinese President Xi Jinping, Santo, at the G20 summit. So clearly it seems like there are now a fear in the market that the recent movement that was made towards easing certain COVID policies, those could be reversed because China might just panic because of the the upswing that we are seeing in cases in some of the cities.
In fact, China itself was a bit tentative on that.
Exactly.
They are not said that they are actually easing up. They just said that a few restrictions they were just revisiting.
Yeah, true. But true to our nature, Santo, the market, of course, always reading more into it and always trying to read between the lines. And you can see that in the Nifty and Sensex today, deep cuts coming there amid weak global cues. Asian markets, European stocks, both were down today on fears of Chinese lockdown. Also, some interesting commentary coming out from the equity desk of Goldman Sachs Investment Bank. They are saying that bear market is nowhere close to being over. This rally that we have been seeing in global stock markets is likely to fizzle out pretty soon, maybe by the end of this year. And they are saying that equities will see their true bottom of the current bear market only in 2023. So clearly, not so great news and cues coming out for the bulls today this morning.
Well, Goldman Sachs had said the same thing in September also. They've just reiterated what they've always been saying, and that said, it's very clear, CJ, with the Fed having made it very clear that it's determined to stamp out inflation, there is no way that it can have an exuberant stock market, and strangely the stock market doesn't seem to get that. But that said, back home, I think once again the focus will now shift to technical levels. After the weakness seen over the last couple of trading sessions. In fact, 18,100 for the Nifty is the next level that traders are now keeping an eye out for. And some FNO cues here. So, short build-up of positions seen in futures of Bandhan Bank, Jubilant Foodwork, TVS Motor and Petronet LNG, whereas we are seeing build-up of long positions in futures of Escorts, Havels and NMDC.
Well, thank you for this FNO Q, Santo. Moving on to the top 5 stocks that were buzzing in trade today and were on our radar, starting off with a name from the automobile space that Santo is getting very skeptical about.
Well, TVS Motor is the stock now, been one of the star performers this year, but has been now struggling over the last week or so. This probably indicates that maybe the story that the market was very upbeat about, now analysts and investors are getting a bit cautious there. Now, the second quarter numbers were pretty decent, but again, as some analysts pointed out, the expansion in margin was not as much as the street was expecting. Now, remember, TVS Motor has been one of the early movers in the EV game, but now the field is seeing a lot of competition, which then means that probably the margins will not be as juicy as they were at one point in time. CLSA is bearish on the stock. It has a sell rating on TVS Motor with a price target of 932 rupees, and it feels that basically at current levels the valuations just don't support this kind of the valuation, the fundamentals don't support this kind of valuation, and it says that the export market could be some kind of problem there. You won't see the same kind of growth that you've been seeing in the export market previously. Motilal Oswal is also a bit cautious on the stock. It has a hold rating on the stock with a price target of 1000 rupees, and it says that at 20 times FY24 earnings, probably most of the upsides are already locked in.
Well, Santo, I can understand your caution on valuation. Clearly, that is something that will always remain up for debate. But to suggest that the EV, story is running out of steam, I think is just too early to say at this point of time. Because if you look at TVS Motor, if you look at their launch pipeline, probably they have the most lucrative launch pipeline currently in the entire industry, according to UBS Securities. We have already seen the strong response that one of their products, iQube, got. Clearly indicates that this is a company that really knows what it's doing. It's not just fluffing its wings just to try to be there for the heck of it. Clearly, TVS Motor is trying to crack this game pretty well and pretty soon ahead of most of its competition, and it is very, very likely that it's going to emerge as a sector leader as far as EV two-wheelers is concerned. That is the view that UBS Securities held not so long ago, and I think the current pause that you are seeing in this in the stock rally, Santo, could be more a sign of fatigue rather than lack of interest. Sometimes when stocks rally too fast, they tend to take a breather because they want earnings to catch up. Ultimately, earnings are like a tortoise, and of course, stock prices are generally like a hare. So generally, stock prices will move ahead of earnings, and I think right now, earnings are just catching up to that performance and probably going ahead as we see more evidence of TVS Motor doing well in the EV space. Barring, of course, the export market will take a hit. That is definitely true. Given the slowdown, you can already see it in the numbers, monthly volume numbers, that export market is clearly taking a hit. But I think slowly and steadily, investor focus will start getting more and more acute on the EV space. And if the execution comes through, clearly you could see another leg of re-rating happening.
You just made my point for me. That's what I'm saying. Probably now the price has got ahead of fundamentals, and now there will be a pause till the
But
earnings
that does not
catch
mean
up.
that there is too much drawdown to be seen from here, right? I mean, the stock has not fallen off the cliff, probably as you would have seen for a lot of narrative stocks of 2021. I don't think we have seen that sort of price damage yet. So what I am suggesting is that price damage is going to be very limited, and probably a long-term investor might see this as a buy and dip opportunity.
Let's see.
Well, moving on, the first stock on my radar today would be from the multiplex space. PVR clearly buzzing in trade today on the back of a very strong launch for Drishyam 2 over the weekend. Now, Drishyam 2, of course, the Ajay Devgan starrer, clocked sales of about 37 crores in just Friday and Saturday. Of course, we don't have the Sunday trade data numbers, but for Friday and Saturday, those were very, very strong numbers coming in from Drishyam 2, clearly indicating that there is demand for good content as far as multiplexes are concerned. According to Novama Wealth, Q3 clearly is turning out to be quite well after the disaster that was Q2, where you saw a lot of Bollywood movies flopping at the box office, and that in turn affecting the earnings of PVR as well as INOX. Clearly, there has been a sequential improvement as far as Q3 is concerned, and they are of the belief that in the near term, stocks of both PVR as well as INOX could do quite well, because there is a very strong pipeline of movies, both regional as well as Hindi, heading into December as well as the first quarter of 2023 cycle.
Well, CJ, there's a saying called that one swallow does not a summer make. In the case of PVR also, probably there is demand for good content, and maybe Drishyam is delivering that. But at this point from the graph, I can't see any demand for PVR shares very clearly. So clearly the market doesn't seem to think that just one movie alone can change PVR's fortune.
Absolutely, yeah.
Now remember, this is a stock which cannot really be measured on the conventional P valuation basis, right? It's pretty much a story stock, very much like the stories that it shows on its screens. Right?
Nicely put.
So there are times when investors buy the story, they rush to the stock, which is what you saw the stock probably climbing to about 2200, and since then you had a string of flops. The stock came back to earth. It's now at around 1750, and it's languishing here at this point in time. I think investors are still waiting for a few more possible hits before they can see some improvement, significant change to earnings before they take a bet, CJ.
Well, Santo, moving on, your second stock that was on your radar today.
Well, my next stock for the day is Interglobe Aviation. Now, typically the third quarter is a good one for aviation companies, and this quarter should have been something similar, but looks like things are not playing out the same way for Interglobe Aviation at this point in time. You're seeing some fatigue in the stock price. It's holding well in today's market, but on the whole, the stock has not really participated in the rally, and one of the reasons for that has been that the aviation sector in general has been struggling with a shortage of engines, spare parts, and even aircraft, which means that most airlines have been unable to operate as many flights as they would have liked to during the busy season. Now, of course, airfares have gone up, typically, which they anyway go up during a holiday season. But if you are operating less number of flights, clearly you won't be able to make that kind of profits which you would otherwise make. Morgan Stanley is among the brokerages which is still bullish on the stock. It has said that among the key things, it has highlighted the points that the management commentary, which said that traffic now is back to pre-COVID levels, domestic traffic at least, and now slowly you're going to see a pickup in international traffic as well. Also, the available seat kilometers for the third quarter is quite strong at this point in time, but there's a chance that the higher costs, having contracted higher crude oil, those costs will reflect in the current quarter. So all in all, the stock could be range bound for some time, CJ.
Clearly, Santo, I think the demand issue will remain for companies. Not only that they are not able to capitalize on whatever existing demand there is, but clearly with airfares going the way they are going, there's a possibility of some bit of demand damage happening in that sector in the coming quarters, if not in the third quarter. Also, while I agree that there could be some bit of temporary relief as far as the competitive intensity is concerned, especially given the renewed concerns around Jet Air becoming operational, given the concerns that their new bidders are facing at the NCLT. But overall, as far as margins are concerned, I think they still will remain under pressure for me, because at this point of time, fuel costs are still quite elevated, even if you look at it from a year-on-year basis or on a quarterly basis. So on both fronts, margins are going to get bashed for Interglobe, and therefore it is very unlikely that this stock is going to perform too well, or at least outperform the market going ahead. Well, the next stock on my radar today is Dish TV. The stock was buzzing in trade today, clearly with some word out in the market that possibly Tata Sky could look at acquiring the company. Apparently, Yes Bank, which has about 24.78% stake in the company, nearly 25% stake in the company, has been offering its stake to buyers such as Tata Sky and Bharti Airtel, who have in the past, shown interest in acquiring, the Dish company. Apart from that, as far as the valuation are concerned, that also getting a little bit of benefit from the murmurs of a potential IPO from Tata Sky itself. Now, of course, Tata Sky is the industry leader, and there is a possibility that the valuations that company gets could start reflecting on Dish TV as well. So, and we know that Dish TV has been down and out for the past 3-4 years now, especially with with the concerns that its earlier parent company, Zee Entertainment. So clearly there is a case for mean reversion as far as valuation are concerned, and of course, if the sale does happen, that could bring in a strategic investor like Tata Sky or Bharti Airtel, which could be potentially quite good as far as the long term is concerned. So for me, I think Santo, in the short term, this could be a good tactical play to have in your portfolio, given that, or what you call a special situation sort of an event happening on this counter going ahead.
Well, I agree with you on that one, CJ. Probably it could turn out to be a tactical bet, but don't forget 9 months ago there were similar chatter that Bharti Airtel is in the fray to pick up a stake, and now you're hearing Tata Sky. So all kinds of names coming in here, and whenever that happens, you see a brief spike in the stock price. So unless someone is going in with a clearly tactical bet, a strategic kind of call on the stock, I think one should be very cautious. But at the same time, there is some improvement in the company's operating performance also in the first couple of quarters of this fiscal. Company has been posting profit at the net profit, whereas for the whole of last year, the company had run a loss of close to over, I think, 2,100 odd crore. So from there to now, a significant improvement. I think that makes a bit of sense, but how far the stock can rise at this point in time, well, that still looks a little doubtful.
Well, Santo, moving on to your last pick of the day.
Indian Energy Exchange. Now, the stock is up, is an outperformer in today's sluggish market. Basically, the company has said that its board will be meeting on November 25th to consider a buyback issue, and the strength in the stock seems to suggest that maybe the market expects the buyback price to be at a hefty premium to the prevailing market price. But that said, CJ, the stock is among the big underperformers of this year so far. It's fallen more than 40%. Year to date, it's down over 40%, and for good reasons. It was a strong theme story to begin with. It's a power trading platform. Power prices were on the rise. There was a shortage of power, and all that led to stock quoting at very good, juicy valuations sometime last year. But then all that seems to have come off rather quickly. And again, if you look at the October volumes also, not a very pretty picture there. Now, the company had said that it's not really bothered by competition, but yes, competitive intensity too seemed to have had some impact there. October volumes down by about 13% year on year, and also almost 10% month on month. The base effect was clearly there, But at the same time, lower trading volumes from REC is also said to be one of the reasons why volumes came off so sharply. And now there is the cap on power prices which CERC has put. It had initially put that till September at 12 rupees per unit, and now that deadline has been extended till December. But the cap doesn't seem to be the big problem at this point of time, because prices are anyway coming off. The easy availability of coal was in short supply till some time back. Because of that, power prices were quite high. But now with coal becoming fairly abundantly available at these levels, power prices have been steadily coming down, and that is hurting a company like Indian Energy Exchange. Besides, also let's not forget, in winter typically demand for power is also low. So you have added pressure in this quarter as well. So you might see a bump up in the stock price briefly, but to me it looks a little doubtful if it can sustain beyond a point, CJ.
Well, Santo, I think the buyback clearly is well timed, given the fact that the stock has taken a battering. If you look at 2022, down almost about 45% for this year. But I think what will be more important is the route through which the buyback happens. If it's through a tender offer, then it could substantially affect the stock price. But if it's through the market offer or the market route, market purchase route, then I doubt that it will have the sort of intended impact on the stock price going ahead. But clearly, it should provide a floor to IEX's stock price at this point of time. And as far as the fundamentals are concerned, despite whatever we have been seeing in terms of the second quarter earnings, the management of the company has retained its confidence that they can recover market share in the second half of FY23, as well as see an uptick in volume growth as well going ahead. So it will be interesting to see it as the market versus the management. As far as IEX is concerned, the market seems little impressed by that commentary that the management at this point of time is still holding fort. That said, let's take a quick check on the market and how we are doing before we wrap up the day's show. And Santo, it looks like we are going to close near the day's low. There is no 3 o'clock rally today. Nifty down about 0.8% at this point of time. Sensex on similar lines down about, I think, 0.9%, 0.8% again, clearly. And the biggest sectoral losers seem to be the Nifty IT index. The Nifty IT index down about 1.5%. If you look at the Nifty metal index also, clearly that move from the government to withdraw export on steel on the steel sector has not really worked out in favor of the IT metal companies. Nifty metal index down about 0.8%. But it's the broader market, Santo, where we have seen some bit of hope, especially in the small cap space.
Well, some selective gainers in the metal segment. So I think investors are going for those stocks which have been underperforming for quite some time, and maybe that explains why Steel Authority of India is up by close to about 1%. NMDC, again, this has also been one of the key gainers today, up a little over 3%, because the move is expected to benefit exporters of iron ore and pellet makers more than steel companies. So that's one of the reasons you're seeing the rally in NMDC at this point. But on the whole, the general view, as CJ and I discussed this morning, is that it's not likely to improve the earnings of steel companies in a big way anytime soon. Global demand is also quite weak at this point in time, and in fact domestic prices are higher than export prices, and it would work better for steel companies to actually sell more in the domestic market.
Absolutely, Santo. Then moving on to the last section of the show, of course, watching out for what will be there on the horizon for traders and investors. Of course, there's not much economic activity or any sort of data points coming out, but do watch out for a speech from Fed member Loretta Mester on Tuesday. Clearly, that will be an important speech to watch out for, given the fact that her comments in the past have tended to move the market, especially in the US. So that could have indirect impact on our performance on Wednesday morning. But largely that's Santo, and I think on that note we can probably wrap up the show for today.
Well, CJ, it's a very tough, unenviable job for the Fed officials. First they have to hike the rates, and then till the next rate hike they have to keep hammering that message again and again, saying that yes, we will bring inflation.
But sometimes the message also changes, in between policy meetings. Sometimes message also changes, as we have seen at least in the past month or so.
Well, and on that note, we wrap up this edition of Markets with Santo and CJ. As always, thanks for watching, and continue to write in to us. So we'll be happy to clarify any doubts that you may have.
And guys, keep following us on the social media links that you saw at the bottom of your screen earlier. And of course, for all your financial news, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll catch you again live tomorrow morning at 9 a.m. Till then, have a great day.